Hey friends, welcome back to another video. So today we are going to be looking at fundamental analysis, and we're going to be looking at what fundamental analysis is. So fundamental analysis is a method of assessing a financial asset's value. So for example, if you buy a piece of land, let's say in 2002, for example, you would want to assess the value based on the location and based on the possibility that the place might develop over time. So if you bought that land for about $10,000, you would want to be able to assess it and hope that in the next 20 years you would be able to get about $120,000 from this particular purchase. This is what fundamental analysis is. It is using both the economic and financial factors to determine the value of an asset, to determine if the value of that asset is fair or if it's not fair. So this may include things like the state of the economy. It might also include things like industry conditions as well as businesses connected to that asset. That is, if there are any businesses connected to that particular asset. So once the fundamental analysis is complete, we aim to determine whether that asset is undervalued or overvalued. So if that particular asset is undervalued, then you would make a particular choice if you would want to purchase it or not. And if it is undervalued, if it's overvalued, you would also make that personal choice by yourself. So in terms of cryptocurrency, the fundamental analysis may include an emerging field of data science that concerns itself with public blockchain data called on-chain metrics. So these metrics include things like the network hash rate. It can also include things like the top holders and the number of addresses, analysis of transactions, and so many different things. While normally fundamental analysis is widely used in the stock market and forex, it is less suitable for cryptocurrency in its current state. The the assets class is new, that there simply isn't a standardized comprehensive framework for determining the market values. What's more is that it's normally driven by speculation and narrative. So if someone says something good about the crypto market, then normally the price goes up. And if someone says something bad about the crypto market, the price goes down. So it makes it a little bit more difficult for you to be able to predict one particular field. So I would say is, if you're looking at something like cryptocurrency and you're looking for an analysis to use, then fundamental analysis might not be the right route to go because it is more difficult to predict in its current state right now. So, but this is also your personal choice on which one of the two for you should pick up. So any questions that you guys do have about fundamental analysis, please don't forget to leave it down in the comment section down below, and I'm gonna see you guys in the next one.